All right. Welcome. Good to see you guys. Welcome to part 2. We're going to go over here and hello. So, welcome to DrChefsCrypto. I'm Dr. Chef, and this is the second part of the crypto meltdown video. Wow. All right. So, the madness continues as we flirt with 20, up and down, and multiple things collapse, and the craziness continues. I've been making videos for quite a while. I have a bunch of them on here. I highly recommend that you go back and search through them for any kind of content that you need. If you're looking for things about security, things about safety, things about where to store stuff, how the different sites work, how the different wallets work, all about crypto, all about the alternative level 1 ecosystems, all about the macro pattern that we're in that's actually good news. All of that's on here. There's over 90 videos. So I highly recommend that you go back and take a look at that. So let's just get started in this particular one. This is the 26th of June 2022, and we are in a little up and down phase, what we call sideways action. And I am Dr. Chef, and as you know, I am not an official financial advisor. This is for entertainment and education purposes only, and we have fun on this channel going through all the details of crypto from very basic stuff. So if you go back to a year or two ago, you'll see videos that are just basic introductory videos. How does crypto work? What is a blockchain? Things like that. If you come forward, you'll get more advanced training. What's a level 1? How does this macro pattern work? What do the patterns mean, etc. All that's on here in abundance. So please avail yourself of that. Feel free to ask any questions you like. Send me any questions. Put them down in the comments. I'm continuing the crypto meltdown because that's the time frame that we're in now. It's also the time frame we're supposed to be in. It's also the video that I made that had the most interest, and I think it's because people are interested in what's going on in the crypto world and the macro pattern I'm talking about and how this all might pan out. And I can talk about that right now. So go back if you like and look at other stuff. Otherwise, let's just jump right into it. We'll fly out here real quick and head over to CoinMarket. CoinMarketCap.com is a tool, and I have an entire video on tools. And as you will see, we are in the recovery phase of a big bounce. Now, what am I talking about? Well, in this particular phase of the operation, 20,000 is the number. It is the most important number. And you can see that we are at 21,354 right now. Now, if you look at the chart, you'll notice that it's been up and down, and it's flirting with this number. So let's go out to 1 month. And you can see that back in May, I guess early June, everything was trading sideways in the 30 range. You see all this? Basically, 30 was the number back here in May and early June. Then you'll notice this drop. And this has to do with a lot of different things. Primarily the macro pattern, but also has to do with all the collapse of things like Luna, Celsius, etc. As we drop through, and then it zigzags here, we stabilize in the sideways pattern. But then, one day, we drop below 20. This 20 is our new sort of support and resistance danger zone. If you're new to the game, support is a bottom number that tends to bounce. In other words, people think that's a good price to buy, so when it gets down there, they hit it right there. Resistance is where they think it's a little too expensive in the current market, so they sell. They're glad to get that number. This action here is what we call sideways. Okay, we call that a range, and there's plenty of videos previously on my channel, so go back and look at those if you like. This is sideways action, and we've been sideways now since we recovered above 20. So we're looking at a week or 10 days so far that we have recovered and are headed sideways. If you look at this very carefully, and I'll blow that up for you, right? But if you look at this type of action where this is very little variation, this is a stabilization pattern, and as you can see, there's the 20. There's the 20. You see it bouncing? So we recover right here. Bounce, 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 bounce. Okay? This is called a recovery pattern right here. And then 20 becomes our support. And then we enter into a sideways range. This action here is indicative, and I'll shrink it back down, is indicative, and you can see how flat volume is, right? Volume is flat. You see, this is the volume down here, if you don't know how to read these charts. So, what does all this mean? What does this particular pattern mean? Well, this particular pattern means that we are in a sideways range. It means that there's not a lot of action up and down. Hasn't been for a week or two. So let's talk about psychology for a second. What does that mean about the majority of the crypto market? What's the psychology? Well, the crypto market as a whole, first of all, when the major dips began earlier in the year, we lost all the hangers-on. The people that were just playing games because 21 was so fabulous. They all dropped off. We're down to about half of the people that were in it in 21. You got about 5% of Americans probably paying attention to the crypto market in some way. You got about 1% really studying and trying to stay on top of it. The number is very, very small. We got up to probably 14% of Americans involved with crypto at the height of 2021 when the all-time highs were coming and everybody was talking about all the millionaires being made every day and all of that. And that's all wonderful, but that's not the norm. There's a 4 or 5 year space between each of those. That's what's called the macro pattern. But anyway, here we are, and what it means is we dropped below 20 temporarily, but we popped back up because everybody said no. That's it. All the whales, all the big companies, all the countries, everybody involved in crypto said, we're going to stabilize right here, right above 20. We're going to stabilize everything. We'll buy a little, we'll sell a little, we'll do whatever it takes, but we're holding. We're stabilizing above 20, and we're holding. No significant numbers of people are buying. No significant numbers of people are selling. We're on a holding pattern. We may last in a holding pattern for quite a while because 22, the rest of it does not look to be anything positive, and 23 is not going to really be anything positive. 24, however, is the next halving, and then 25 will be the next all-time high. So you can track, if we stay in the macro pattern, you can track all of that. So right now is as good a time as any. You could do what's called DCAing. One of the people that I admire the most, a couple of them online talk about DCAing, which means dollar cost averaging. What it means is you just set up an account where you just buy a little bit all the time, like every week, and it'll average out over time to make money. And that's true, especially now. So 2022 is a great year to be DCAing. It's a great year to just be buying a little bit every now and then. You can wait for those drops below 20 and catch them. You can also wait for the other alts. I mean, you're talking about 90% losses in almost all alts right now. That doesn't mean anything's gone as a rule. Doesn't mean it's not coming back. It is. But which ones? Because you've seen Luna, Terra, Celsius. I think a couple other ones might be in trouble as of today. You've seen that action where things have dropped out. So you need to be careful. And in these turbulent times, stabilize. Use your hard wallets. Use your very secure hot wallets if you like hot wallets. Do not hold anything on a platform. Be very, very careful right now, because if you're holding on a platform and the platform fails, as we've seen twice in the last month, then you could lose your funds. So, hang tight. Don't panic. Buy if you can, but definitely, don't sell everything right now, because you're at lows. You're going to lose money. And don't store on a site. Now, I know that's hard. When things were up, a lot of us got involved in DeFi, decentralized finance. You put your money in to funds that make good returns. Some of those returns make sense, 5, 10, 12, even 15%. Some of those funds don't make sense, 40%, 80%. Think about the math of economics. How do you pay 20 or 30% out on something? And now we're watching several of those fall. Now, if you've got a reasonable percentage, this is a great hedge against inflation. It's a great alternative to your savings account where you would be making negative money. So, obviously, you want to do the best you can with your money. You want to put it in the best place. There are some secure sites. There are also ways to hold your money with interest accruing on hard wallets. So there are several secure ways to do this. The big boys, the things like Coinbase, Crypto.com, etc., have not been under threat. Tether has held, even though it's been under threat and attacked, it's held solid. USD is doing great. Quite a bit of the sites are in good shape. Some are under attack, like Binance, but Binance is huge. I don't expect it to go away, but you need to read the crypto news. You need to pay attention. And for now, secure your property, secure your assets. Put your crypto in a safe place. Hard wallets are best. Wait it out. Buy if you can. If you haven't seen my chart and know what I mean by macro pattern, basically, and I can pull it up again, but just go look at one of the 10 videos about it. I made a chart where I put every single month of Bitcoin for all time. Tracked every movement, tracked every pattern, set up algorithms that tracked it, found out when the halvings were, when the all-time highs were, what the patterns were. That indicates that in the second and third quarter of 2022, it should be similar to 2018 and 2014, and that indicates that it should be in the lows in the 30% range. Well, 68,000 was the high in November 21, therefore 30% would be in the low 20s, and here we are today in the low 20s. So far the macro pattern is holding. It's been holding for 12 years. It's been holding specifically since the beginning of 2020 that I've been tracking. So if it holds now throughout 22, it means that we know when the halving is in 24, we know when the all-time high will be in 25, and we stand to make a great deal if we're paying attention and being careful. For now, buy if you can, but secure your assets. Play it safe right now. Too much chaos, too many ecosystems and assets collapsing. This is the low time. For the next year, this will be the case. After that, things begin to improve. But for now, play it safe. If you have any questions, you can reach me at DrChefsCrypto@gmail.com, or you can just leave a comment below and I will respond to your comment right away. I hope you're having a fabulous day. Do not throw yourself off a building. Do not panic. Yes, everybody's portfolios are worth less right now. Yes, typically that's a third. That's what it's supposed to be. You just hold it and you wait. That's why it's called hodling. Okay? Thanks, guys. Have an awesome week. If you need anything at all, just holler at me. Dr. Chef. Thanks. Dr. Chef out.